Well, Twitter reporting revenue that's pretty much in line with expectations, $1.28 billion. Earnings per share reported at a 54-cent loss, but that's not comparable with estimates. It does include a roughly $750 million fine that was announced earlier in the quarter. So if you subtract that out, it would be a gain. We're working on getting those exact numbers. Now, monetizable daily active users, that's the key user metric, coming in at 211 million versus the 211.9 million estimated, so just under a million miss, but did share guidance on user growth, saying it'll be flat to up in the fourth quarter. And fourth quarter revenue guidance for $1.5 to $1.6 billion, with a midpoint below consensus, but within that guidance range. Now, in terms of weighing in on this Apple operating system change that's been front of mind for all of these platforms, I did speak to Twitter CFO Ned Siegel. He said that the company benefited from being 85% brand advertising and only 15% direct response advertising. That category is more exposed to those iOS changes. Siegel telling me, quote, "We are coming from a different starting point than other platforms, so we see a modest impact in Q3 and are incorporating that into our Q4 guidance. We still think there's opportunity for us to improve the relevance of ads on Twitter." Now, as for concerns about a pullback in advertising on supply chain issues, there was no specific reference to that issue, one that was front and center for Snap. No reference to that in the letter to shareholders, but they did say that more than half of ad revenue on Twitter is tied to services and digital goods. And guys, of course, those wouldn't feel the pinch from supply chain issues.